where students aren't being told to expect significant tax liability on their stipend checks, and like making sure that they save money for taxes. There's no mechanisms like withholdings where the schools will pay the taxes on the students' behalf, and so the students just kind of have to like figure it out and learn the hard way during their first tax season. And I feel like that's not really the way to go. That there definitely needs to be a lot more resources across all the universities in the country to really help educate these students on their tax liability and really help support them through it as well.
Welcome to the Personal Finance for PhDs podcast, a higher education in personal finance. This podcast is for PhDs and PhDs-to-be who want to explore the hidden curriculum of finances to learn the best practices for money management, career advancement, and advocacy for yourself and others. I'm your host, Dr. Emily Roberts, a financial educator specializing in early career PhDs and founder of Personal Finance for PhDs. This is Season 17, Episode 7, and today my guest is Jack Mao, the founder of Tax Fellows, a nonprofit organization that prepares pro bono tax returns for Stanford students. Tax Fellows primarily serves first-generation, low-income undergraduate and graduate students, and has a special focus on the tax implications of receiving scholarships and fellowships, such as the Kiddie Tax and estimated tax payments. Jack shares the advocacy approach he's taking to reform the Kiddie Tax at the federal level and lists ideas for how graduate students across the U.S. can bring more attention and resources to resolve their tax pain points. The tax year 2023 version of my tax return preparation workshop, How to Complete Your PhD Trainee Tax Return and Understand It Too, is now available. This pre-recorded educational workshop explains how to identify, calculate, and report your higher education-related income and expenses on your federal tax return. You'll hear me reference this workshop once or twice during the interview. Whether you are a graduate student, postdoc, or postbac, domestic or international, there is a version of this workshop designed just for you. Go to pfforphds.com/tax return workshop to read more details and purchase the workshop. By the way, it's never too early to start laying the groundwork for university sponsorship. If taxes are a pain point for you, please let the administration at your university know that you would like them to provide additional resources, either during next tax season or near the beginning of the academic year, as Jack suggests near the end of the interview. I can license one or both of my asynchronous workshops or deliver a live seminar. Please CC me, Emily, at pfforphds.com if you decide to recommend me. You can find the show notes for this episode at pfforphds.com/S17E7. Without further ado, here's my interview with Jack Mao of Tax Fellows. I have a really special guest joining me on the podcast today. His name is Jack Mao, and I'm going to let him introduce himself to you further in just a second. I just want to say how we got connected, which is that I have been working with Stanford this past tax season to provide my tax workshop to their graduate students and postdocs. And Jack started an organization at Stanford called Tax Fellows. It more serves on the undergraduate side, but definitely some overlapping interests and populations between our two. And so because of our mutual collaborators at Stanford, we got to talking and just had an absolutely fascinating conversation. I knew that I had to bring him onto the podcast. So Jack, we're going to get into your whole background, but just really briefly, can you tell us who you are and what you're up to right now?
Sure. Thank you so much for having me on the podcast here, Emily. My name is Jack. I was a Stanford student until recently, and I've been also a credentialed tax professional, federally credentialed for the past couple years, but in the industry for about 6 years so far. And yeah, it serves a lot of college students. That's kind of my strong suit, and so it was natural for me to just kind of start Tax Fellows in partnership with the IRS and a few Stanford offices to help out other college students with their taxes.
Yeah, and this is a really unique organization. I haven't found one like it at any other universities I've collaborated with. So I want to hear more about that. But first, I want to get a little more background on you, Jack, and sort of how, as an undergraduate student, you became interested in income tax and ultimately, that led you to starting Tax Fellows.
Sure, sure. So, my background is actually in computer science, and so totally different than tax and accounting. But it was back in high school. I was so I come from a low income background, and I was trying to start a small business to help out with family finances. And at the time, I just had my McDonald's paychecks to pay for everything, which wasn't really enough to pay for accountants or lawyers' advice. And so what I did was, as a good CS major would do, I just Google everything. Would not recommend unless you plan on switching, majors and industries or careers. But yeah, Google everything. Really loved just the way the tax system works. I hate paying taxes, but it's just it allows you to have a lot of creativity and flexibility and kind of finding ways to get around taxes you don't really want to pay at times. And so that was really fun. I really want to go more into it, and to decide to volunteer with the IRA's VITA program that works with nonprofits to provide free tax services to low-income taxpayers. So been in that program ever since, and still am in that program through Tax Fellows today.
So, can you explain a little bit more what the connection is between the VITA program and Tax Fellows? Is it exactly the same? Is there
Sure.
is there more to it?
Sure. So originally we started out just as a VITA site, and so Tax Fellows is a 501c3 nonprofit. It's a standalone nonprofit that's separate from Stanford. But we partner with the IRS, where the IRS helps us provide some training, some overhead, and oversight, and helps us source a lot of our volunteers as well. But now that Tax Fellows has finished their first year and going into our second tax season, we have been expanding our programs a little bit to also provide a additional pro bono program called Tax Advisors, where we have our credentialed tax professionals on a team prepare more complicated tax returns for undergrad students with Kiddie Tax obligations. Just because that is something that is outside the scope of VITA program, and so we couldn't prepare those in the past. So we kind of are, in a way, half a VITA site and half a kind of a pro bono tax clinic in a sense. And so, but we do have a pretty good partnership with the IRS and a few good stakeholders in the area.
And just for the listeners who aren't familiar with VITA, maybe they've never been to, access the services that are available to them at their university or their
Sure.
library in their city or whatever. Can you explain like who that program is for?
Sure. So Tax Fellows is, or just VITA program in general, is for low-income taxpayers who might want some additional help with their taxes, but might not be able to afford, say, a tax professional. And so, VITA sites, they are run by nonprofits that the IRS partners with usually, and they're staffed by volunteers, many of whom are credentialed professionals or retired professionals, but a lot of whom are also just newer folks to the industry who want to get some more experience. That was kind of how I got my experience. Um, with taxes, and just kind of having the IRS train them on the volunteers on these basic tax topics so that they can help prepare your tax returns for you at no charge. These are all out of the volunteers' generosity, out of their time, and so but it's a really great program with a lot of guardrails so that the quality control is usually pretty high. Um, and yeah, yeah, definitely a really great program for anyone who makes under around $64,000 every year, and have fairly simple situations to get their taxes done really great and for free. So,
I'm so glad you mentioned that number because in a lot of the country, people are making less than that amount of money. So it really covers
yeah,
a broad swath of people, especially my
definitely.
population, graduate students, even some postdocs will fall under that level of income. So they can almost always, if they have a Vita site available to them, access those services. And I'm really glad you just mentioned, there's guardrails there. You have to have a simple tax situation to really benefit. And that's why you mentioned earlier that you started this tax advisors wing of tax fellows. Let's talk a little bit more about some of these like confusing tax issues that may be common between like the first generation low income population that you serve and then the funded graduate students and potentially postdocs population that I serve. So you mentioned the Kiddie Tax. Let's brief overview right now about what the Kiddie Tax is for anybody who has the misfortune of hearing about this for the first time.
Yeah. So, Kiddie Tax originally, the inspiration behind that on the legislation side was, a lot of these high net worth individuals, parents especially, would have pretty high marginal tax rates. What they would do is they would have tax professionals who would kind of find all these little loopholes, and one of them is they could just pass along their investments to their children who are basically making no money, right? Especially if they're a minor. That way they could both save on taxes. Congress didn't like that. And so they implemented Kiddie Tax, where if the child is a minor or a full-time student who didn't earn from a job, so earned income, more than half of their living expenses, then they're considered basically, in a sense, a soft dependent of their parent. And so any unearned income that the child has now will be taxed at their parents' highest tax rate. And so that way, the richer parents can't just pass on their investments to their children because they'll be taxed at the same rate, basically. Unfortunately, the way Congress defined Kiddie Tax was very broad, and so it also encompasses college students who have taxable scholarship, financial aid, fellowships, where if they don't have earned income from a job, that's more than half of their expenses, especially at Stanford, where cost of tuition and like the room and board are like in $80,000 to $100,000 every year, if not more. And so the student, not only do they have to like work a full-time job, making more than 50K to get out of it, it's just a lot of qualifications, and so too much complexity, and that's kind of one of the biggest reasons why we're so popular at Stanford as well, just helping students navigate through all this complexity.
Yeah, that makes sense. And this hits my population all the time when you're receiving a fellowship. One of the things about the calculation that goes into the Kiddie Tax is that your expenses include your education expenses and not just like your living expenses. So that scholarship that goes towards paying your tuition, the cost counts as part of your living expenses, but the scholarship that pays for it doesn't count on like your side of the ledger of like providing half of your own support. So, right. So like they get hit with this fellowship issue too. Now, what was interesting about the Kiddie Tax, I think I read into like the history of this, and it seemed like there was like a creep going on. Like at first it was just minors, then it was up to age 19, then now it's students up until through age 23, under age 24. And so over time it kind of like expanded and expanded. But there was a reform a few years ago with the Tax Cuts and Jobs Act that attempted to make some changes to the Kiddie Tax. And it really hit your population, that low income population, because what they did was for a couple of years, changed the definition so that no longer were you taxed at your parents' highest marginal tax rate, but you were taxed at the marginal tax rate for trusts, which simplified things, certainly, because you could just look at a table and see where you fell on that instead of having to link your tax return with your parents. But if your parents were low income to begin with, maybe that Kiddie Tax was not so big of a bite. Now, if your parents were high income, of course, it was a big bite. But because it really, really increased those marginal tax rates on those low income populations, there was a big outcry. And after a couple of years, I think it got shifted back to the old model of go to your parents' tax rate. So that was, just some interesting like shifts that happened with that in time. But the Kiddie Tax is a very unpleasant thing to find out about. Emily here for a brief interlude. Tax season is in full swing, and the best place to go for information tailored to you as a graduate student, postdoc, or postbac is pfforphds.com/tax. From that page, I have linked to all of my free tax resources, many of which I have updated for this tax year. On that page, you will find podcast episodes, videos, and articles on all kinds of tax topics relevant to PhDs and PhDs to be. There are also opportunities to join the Personal Finance for PhDs mailing list to receive PDF summaries and spreadsheets that you can work with. Again, you can find all of these free resources linked from pfforphds.com/tax. Now back to the interview. Another thing that you and I spoke about at length when we had our prior conversation was about estimated tax, because it's obviously something that I talk about so much with fellowship recipients. But tell me what your experience is with helping people with estimated tax.
Oh yeah. So especially for like first year grad students who have like a lot of taxable stipends, because they get like stipend checks usually, and they would owe a pretty significant amount of taxes. And so to a point that they definitely need to pay estimated taxes, not only like to avoid the underpayment penalty, but also to just not be surprised at the tax bill at the end of the year and try to recoup all the money to pay substantial tax liability. And so we've been educating grad students as they come in, especially the first year grad students, kind of how to pay estimated taxes. Because we also have California, and they have like they're kind of special snowflake. They have like very specific percentages, where it's like 30%, 40%, 0%, 30% for like the amount of estimated taxes that need to be paid. Federal is like pretty straightforward. It's just 1/4 of the tax every quarter. But just kind of educating students on like how to pay those payments, trying to figure out how much to pay. And then kind of repercussions if they don't pay estimated taxes, because grad students, they could be busy, and so I'll just kind of let them decide based on all the facts available, like whether it's worth the effort of doing estimated taxes. Usually it is, because like usually if you don't do it, and for the students that we have served, their penalties are going to be around the $200-300 range in this economy with the inflation, because the penalty is really based on just interest, and the interest rate that the IRS sets for all of their penalties and interest, and it's just prorated across the year based on the estimated tax payment you're supposed to make from that date on to the tax season. And so right now, usually in the past, the rate was like 3%, and so it wasn't too bad. But right now, the rates are in the 7% range, and so it's definitely significant.
I've found that as well, that a lot of
Yeah,
graduate students are aware of the estimated tax issue, but they just
yeah,
choose to not address it until tax season. And if they go into that with their eyes open, of course, that's their decision. But like you, I just try to lay out, okay, this is the trade-off if you decide you're
sure,
just
sure,
going to neglect this.
yeah, yeah,
I think the real tough
for
part
sure,
is facing that, multi-thousand-dollar tax bill that you may
exactly.
not be prepared for.
Exactly, because yeah, students are also taxed on the part of the fellowship that goes to room and board, and room and board in the Bay Area is pretty significant. And so not only do students have to save for taxes on their stipend checks, they also have to like figure out how much tax to save on their housing stipends and some of the other stipends. And I feel like right now there's not really good way for just students in general. I feel like maybe it's just more of a lack of educational resource in the first place, where students aren't being told to expect significant tax liability on their stipend checks, and like making sure that they save money for taxes. There's no mechanisms like withholdings where the schools will pay the taxes on the student's behalf, and so the students just kind of have to like figure it out and learn the hard way during their first tax season. And I feel like that's not really the way to go. That there definitely needs to be a lot more resources across all the universities in the country to really help educate these students on their tax liability and really help support them through it as well.
Yes, I agree with you, of course, because this is one of the main missions of my business. But we'll talk more about how people can sort of get more resources and get more
For
education
sure.
to their own peers later on. But I just want to add on that point. I mean, Stanford, obviously, you and I are both working with people at Stanford. So like Stanford's obviously making a relatively large effort in this area to get
Sure,
people
sure.
informed about this. But
Yeah,
I do not see this at this degree of resources being offered at many other places, which is too
yeah,
bad. But I will tell you that there are a couple universities, I went to one,
yeah,
Duke,
yeah.
where they actually did offer income tax withholding on fellowships. I don't know
Oh,
how or
really?
why it
Oh,
happened. I
wow.
mean, the
Okay.
paychecks were
Yeah.
being processed through payroll instead of through financial aid. So there was a mechanism
I
for doing
see.
it. And it
Ah,
did generate a weird tax form. We got a 1099 miscellaneous instead of a, 1098T or whatever.
sure, sure. Yeah,
So it
yeah.
caused some downstream tax
Okay.
complications, but they did
Yeah, yeah.
offer it. So that is something that
Sure.
I know is happening at some places, and
I
maybe
see.
it could happen at more places. And it would
Yeah,
certainly be
and that's been
easier on the
great.
students than having to engage with the
Definitely.
estimated tax system. So
Definitely.
now that
Yeah.
we've kind of talked about like, this example of the kiddie tax, how the kiddie tax has changed with
Sure.
time, how advocacy actually around after the passage of the Tax Cuts and Jobs Act, when the
Yeah.
tax rates were jacked up for these low income families,
Yeah.
there was an outcry and it was reversed. I want you to give us a few examples, if you don't mind, of
Yeah.
some things that have changed within the tax law over time that relate
Sure.
to students, just so we can see some examples of like this is not completely static. Like these things do change.
Yeah, yeah. So right now, we're actually trying to do some advocacy around the K tax and the taxable scholarship arena, just because it is, I'd say, slightly outdated instead of tax law. It was most recently updated back in the 1986 tax changes. There were some major tax changes back then, and like since then, like I'd say like the just the way scholarships and financial aid work, especially at like expensive private universities like Stanford and like the Ivy League, um, like it, tuition has just gone up significantly. Where I don't think it really makes sense anymore to put a lot of that tax burden on the students, and without any like as you mentioned like schools will have to put withholdings on a 1099 miscellaneous. So like there's not really like a mechanism, say on a 1098T or another like educational oriented form, to really help students, save a little bit on their taxes, having those taxes being taken out already. And so we've been trying to do some advocacy around there, on the legislative side. So we've met with the late Senator Feinstein's office and Representative Eshu's office, who represents the district Stanford's in, to kind of discuss about the struggles that students are going through with K tax and especially like undergrads as well, where they don't get stipend checks really, but even the in-kind aid for room and board, especially on top of like internship income, that is pretty significant burden. We typically see like about $2,000 to $3,000 of burden on in-kind aid, so money that the student never sees. And so they would have to like work a you know good like on-campus job just to pay the tax on again money that they never see. And so it's a struggle. I mean, we've been able to help the students save a little bit on taxes. Optimize with their parents, so that we dumb it down to about a few $100s. But even a few $100s is pretty significant for these low-income students. And so we've been really working with these legislators on ways that we can really change the tax code around this, and the judicial side as well, trying to poke holes in kind of tax code surrounding these topics through tax court, and then we might even do some advisory and meet with advisors through President Biden's office uh, very soon here. Yeah, even on this university side as well, trying to get support fund going for students to pay their tax liability, especially in the first years where they might not expect such high liability, and it would be challenging for them to pay those liability. But it's been tough working with Stanford for now, but we're still keeping at it, and we'll see kind of how it goes over time. Yeah,
I think the kiddie
along
tax
the way.
is such a great example of an issue that's ripe for change. Just because,
Yes.
the way you explained it earlier, which is the way that I understand this as well, is the
Sure,
original
sure.
conception of the kiddie tax was to make it less advantageous for high net worth parents to pass
Exactly.
income generating assets to their
Exactly.
children. And that is
Exactly.
not at all what is going on with scholarship and fellowship income. It's
Yeah.
perplexing
Exactly.
to me
Yeah.
how
Hmm.
scholarship and fellowship income even got tied in with investment income in the first
Yeah.
place.
Yeah.
It's completely baffling to
Yeah.
me.
Well, I mean, even with the legislators, that we've met with, it's been challenging for them to just, I guess, like, everyone has, like, especially the legislators have, lots of different priorities that they need to kind of first solve, and so I guess we weren't too high on the set priority list. I mean, hopefully they're working on it, but it's a lot of politics as well, and so it's gonna be a long game, but we're pretty committed to doing long term advocacy around this. Gonna go at it as long as this is a thing, and just some interesting statistics as well. So yeah, K tax, like as you mentioned, like it's definitely for these high net worth parents and their children, and so typically the median and average income that we see for students or just children who have to fill out the K tax form 8615, the average parent's income is actually in about $1 million taxable income. A lot of these low-income students, their parents are not making $1 million. And so, like, yeah, this is definitely an unintended consequence of the way legislators wrote K tax, and even for taxable scholarship, fellowship in general, it's heavily underreported. Only about $4 billion of taxable financial aid scholarship and fellowship is being recorded, and so it's an area of the tax code that Congress and the IRS isn't really making a lot of money in the first place, and so using those arguments, we're hoping to really push along the change a lot quicker, especially ahead of the upcoming sunset of the TCJA, the Tax Cuts and Jobs Act, back when President Trump passed it, just to kind of see if we can push it along as a rider on those big tax bills that are coming up soon on the Congress side. So we'll see. We're definitely steadfast in our commitment to advocacy here.
And I mean, I'm so excited about this, and I hope you keep
Sure.
keep it up and everything. And I'm
Thank
just
you. Thank you.
I'm really inspired by like the story of how the definition of taxable compensation changed for the purposes of
Yeah.
contributing to an individual retirement arrangement,
Yeah.
because that also
Absolutely.
seems like a very, very tiny niche issue, right? The Graduate
Yes.
Student Savings Act, to, if
Yes.
anyone is not familiar, it used to be
Yeah.
that fellowship income not reported on a W-2 was not eligible to be contributed to an IRA. And this was proposed, federally several times in terms of the Grad Student Savings Act to change this
Sure.
definition so that it could be, and it failed several times until it finally got rolled in with the Secure Act in 2019
Sure.
and was passed. And like, again,
Mm-hmm.
it was a thing that mattered so much to like my
Yeah.
population. And it was amazing that it passed. But yeah, that's a really, really niche issue. And hopefully, again,
Yeah.
some of these other niche issues like the kiddie tax can be addressed too. I actually have one more example.
Yeah.
So the tuition and fees deduction, they tried to eliminate
Oh.
that over and over and over
Mm-hmm.
again, and it
Oh,
kept
yeah.
being like
Yeah.
resurrected year after year.
Yeah.
It's finally
Yeah.
gone now. But
True.
again, for
Yeah.
the listeners who were not in graduate school maybe a few years back,
Yeah. Yeah.
there are currently 3 higher education tax benefits, but there used to be 4
Mm-hmm.
available. The
Mm-hmm.
fourth one was the
Yeah.
tuition and fees deduction,
Yeah.
and it was the least useful and valuable
Yeah.
one. And it ended
Exactly.
up, I mean, the reasoning why Congress kept trying to sort of sunset that particular deduction was that it ultimately just confused people more. And so people would take the
Yeah.
tuition fees deduction
Mm-hmm.
when really one of the credits, for example, might have been better for their tax liability overall.
Mm-hmm.
So my understanding was it was causing more confusion,
Yeah.
and they just eliminated it. And it kind of
Yeah.
sounds bad to like, oh, eliminate a deduction that was available to you, but really there were
Sure.
better ones, better credits
Exactly.
available.
Yeah. Yeah.
So that was another, I just kept watching
Yeah.
that year after
That's
year,
true.
being like, okay, it's finally going to die.
Yeah.
No, they brought it back again. Finally, now it is gone.
No, yeah, yeah, yeah. It's definitely confused some of the students I've served in the past as well. And like, there's just, I think there's a lot of different ways Congress is, trying to help with education expenses through the tax code. But I don't think with the taxable financial aid, fellowship, scholarship section, there's definitely a lot more potential there for change, and so we're definitely hope that Congress can really take up our word. And there's definitely a lot of other nonprofits like us that I've met with who are also advocating for the same thing as well. Typically we don't really see audits rates that high, especially for students, but even then, none of my clients have gotten audited, knock on wood, yet. And so, uh, but I've definitely heard from a lot of these other nonprofits, some of the students that we've been working with. There's one of the organizations that was serving foster youths that I met with, and one of their foster youths got audited on their taxable financial aid fellowship scholarship, and the outcome is not pretty. And so uh, it's definitely one of the biggest and one of the most urgent issues that we're trying to tackle, not only on the legislative side, but also just kind of on the university side as well. Just especially the private institutions like Stanford and the Ivy Leagues, they have a lot more resources that they can more easily deploy, and that's quicker than trying to make change on the policy side of things. But yeah, we'll see.
Do you have any ideas about how graduate students at other universities can do any kind of advocacy work or just ask their university for anything that would help them sort of gain more resources or education or anything that would help them on this, in tax season to handle things a little bit better? So like what can they, maybe not, of course, founding a whole organization like you did, but some little things they could do at their university to get some more attention to these issues?
Yeah, that's great. I think, for example, let's say your podcast and kind of your resources are great. Great starting points. One of the partners that we've worked with and mutual partners here, Mind Over Money, they spoke really highly of kind of your resources, and so that's definitely a great starting point. Just kind of advocating for universities to kind of provide resources and kind of distribute resources across campus. But also, I think like while not maybe not founding a whole tax planning program from scratch, but if a university has a law program, then definitely would recommend working with some of the faculty there to try and set up maybe in conjunction with United Way usually has via programs already set up, and so just kind of using an existing infrastructure in support of Vita sites and just kind of start small one. It could be a small one. Just trying to start out, kind of helping other students with their taxes, and then trying to attract like tax professionals and lawyers to the organization.
So I observed with the Vita site at Duke.
Sure.
Sorry to speak against them, but they
Yeah.
were not preparing returns properly with the weird
Oh,
fellowship stuff that was going on at
I
Duke.
see.
So I would just say whether there is a Vita site or whether you want to start
Yeah,
one, make sure that they know the population that's going to come in and
that
the
is
questions that
true.
they're going
That
to
is true.
have so that they can train
Yeah,
their volunteers specifically towards the situations that they're going to see. Now,
yeah,
because of the weird way that Duke did things, like I actually understand why the mistakes that were made, and it might be easier at
for
other
sure.
places that don't use the 1099
Sure, sure.
miscellaneous.
Yeah, yeah.
But yeah, just to let them know, like, hey, I'm going to
Oh
tell
yeah.
all my friends to come in and like make sure that your volunteers
Yeah,
can do
make sure it's
this correctly and easily and quickly.
definitely, definitely. Yeah, I mean, we don't really see a lot of bio sites in universities where we really should, but even a lot of sites that I've seen at universities, I've kind of had a connection with Yale, and I want to say UC Santa Cruz as well in California. I want to say a lot of them only serve low-income taxpayers that are not students, and like they don't orient their services to students, which I think is a good approach, especially if they're a newer site starting out and not have a lot of those more experienced volunteers or professionals to kind of guide the other volunteers. But yeah, you mentioned a really great point, which is that like not all Vita sites and even tax professionals I've worked with in the past, who have like decades of experience, not all professionals or Vita sites understand kind of all the ins and outs of the tax code that are relevant to students. I've even had tax professionals think that taxable financial aid is not taxable. That's the highest extreme I've seen. But even just like optimizing, especially for a lot of undergrad students, optimizing the you know parts of the tax code involving like tax credits, deductions against their financial aid, uh, and along with their parents who might be claiming, for example, like the earned income tax credit or the premium tax credit for health insurance or a lot of other tax credits, and just like coordinate the tax credits that both the students and the parents are claiming to maximize those resources. That takes a lot of expertise to do correctly. Um, and so I definitely agree with you there. Definitely do be careful with starting biocides and with just tax professionals in general. Just making sure that they actually have the expertise and experience serving students in order to serve you, better and more accurately. And so I think our tax fellows program. Um, Very glad I'm able to help students using my expertise. And we've been invited to train other volunteers at other Vine sites in these student tax considerations. And so, if you're thinking of starting a Vine site, please do reach out to us at Tax Fellows. Happy to kind of walk you through the steps of starting a Vine site and managing a Vine site, but also kind of a lot of the student tax considerations that you should think about and kind of consider. And we'll do some more practice together on it too. But yeah, I think just in general, um, working with university administrators and the folks who run orientation programs to add another orientation session might be just even if it's just like 1 hour long, um, just to kind of prep students for what they should expect with taxes. A lot of these like big picture policy changes, like university, like just kind of like resource changes. Those take time, but I think just adding another program to orientation for new students, that's a really good first step that I think doesn't take too much convincing to do and will be really effective to really help students kind of foresee what they should expect at tax season so that they don't have to get surprised, kind of play game of Russian roulette and like try to guess and pray for the best, I guess.
Yeah, and I'll just have to do a self plug because I have a session like that that's
Oh,
ready
there
to
you go.
go.
There
It's
you go.
perfect for
Yeah,
orientations. It's
it's
live.
awesome. Yeah,
Yeah, so those of you who are listening, if you want me, then please, reach out to me, reach out to administrators at your university. But I would actually say,
sure.
just to even back up from that,
Yeah,
just talking about the issue of, or like the struggle that you're having with your either preparing your tax return or dealing with your
yeah,
estimated tax or whatever it is, just telling the faculty and the administration that you have concerns about this and you want them to
yes,
provide resources to you is very,
yes,
very helpful.
definitely.
Because a lot of universities are super reticent to touch taxes with a 10-foot pole because of
Sure,
perceived
sure.
liability issues on their end. Now,
Definitely, definitely.
it's kind of funny because they do help international students to a great degree. They don't usually offer the same kind of help for domestic students. But if you tell them repeatedly and get a lot of people to tell them that you
Yeah,
want more resources around this, then that's, I think, the best. They can figure out how they want to meet that need, but just letting
sure,
them know
sure.
that that need is there, that concern is there, is a wonderful first
Definitely,
step.
definitely.
Okay. So, Jack, thank you so much for giving this interview. It's been wonderful to
Yeah,
speak
thank
with
you so
you.
much.
And
Yeah,
I want to end
likewise.
with our last question,
Sure.
which is what is your best financial advice for a funded graduate student or an early
I
career
see.
PhD? And it can be something related to taxes if you want. It could be something that
Sure.
we've talked about during the interview, or it could be something completely different.
IRAs. I cannot emphasize enough how important and just like life changing that IRAs can be. Um, there's definitely for especially grad students, PhD students, once you graduate, you might go into academia, but if you go into industry where you're getting paid, six-figure salaries, out the door, it's gonna be, you could still contribute to say like a Roth IRA, but it's gonna be a bit more difficult. There's like backdoor stuff that we need to consider, but um, you know, now is the best time for a lot of grad students with their income level to contribute to a Roth IRA while they still can easily. And once the money is in, it's basically tax-free forever. You could invest in stocks, even occasionally startups if that's kind of your thing. A little biased because I'm running a startup and like Stanford's really good on startups, but that's how folks like, for example, Peter Thiel have so much money that's tax free is because he was able to contribute while he was having lower amounts of income in his early days, and then once the money's in, there's a lot of flexibility and ways to really help maximize your investments while at the same time not having to kind of hinder the compounding growth of these investments with tax payments I have to make, on like dividends or interest or whatever. And so yes, definitely Roth IRAs is big, and like a lot of students are also younger as well, and so the growth potential for those Roth IRAs across 40, 60 years is going to be huge. And so definitely do look into Roth IRA as soon as you can, contribute as much as you can, because later down the line, your future self will definitely thank you for it.
Absolutely. Could not agree more. My current self thanks my grad student self for contributing to my Roth IRA back then. Not to put an even finer point on it, as a graduate student, you're probably in the 12% federal marginal tax bracket, and you may never see that one again. You may be, above that for the rest of your career. So that is the time to do it. And it's incredible. And I love this advice because it's both tax and overall financial advice. Sure. And it's wonderful. Yeah. And Jack, again, thank you so much for coming on the podcast.
Yeah, thank you so much for having me, Emily. It was great chatting with you.
Listeners, thank you for joining me for this episode. I have a gift for you. You know that final question I ask of all my guests regarding their best financial advice? I have collected short summaries of all the answers ever given on the podcast into a document that is updated with each new episode release. You can gain access to it by registering for my mailing list at pfforphds.com/advice. Would you like to access transcripts or videos of each episode? I link the show notes for each episode from pfforphds.com/podcast. See you in the next episode, and remember, you don't have to have a PhD to succeed with personal finance, but it helps. Nothing you hear on this podcast should be taken as financial, tax, or legal advice for any individual. The music is Stages of Awakening by Poddington Bear from the Free Music Archive and is shared under CC by NC. Podcast editing by Dr. Lourdes Bobbio and show notes creation by Dr. Jill Hoffman.